We're looking ahead with Michael St. Jean of Michael St. Jean Realty, and we were talking in the break, and I appreciate your honesty. The forecast does not look good.
Depending on how you look at it.
Okay.
I mean, from a home price perspective, home values have been moving up for the last 4 to 5 months. We expect that to continue throughout the rest of the year and beyond. From a sales volume perspective, we're seeing currently some of the lowest levels of sales probably in the last 30 or 40 years. So less homes transacting right now, although the homes that are coming onto the market selling quickly and with increasing pricing.
Supply and demand, right?
Yes.
So what's holding people back from selling?
Mostly interest rates and fear. We saw, the last couple of years, interest rates went up at in a record amount of time. We haven't seen this much of an increase in such a short period of time. But when the Bank of Canada announced back in the fall that they were going to hold interest rates and then start looking towards decreasing interest rates, we saw a big bump in activity in the market. Prices stabilized probably in and around December, and we've seen prices moving up every month ever since. And of course, now the turn is towards interest rate decreases. So a very interesting environment.
Because yesterday, the Bank of Canada announced they were holding their rate steady for the next little while at 5%. If it goes down, we were talking about housing affordability. Not seeing it. Homes right now are the most unaffordable they've ever been. I know maybe some people thought when interest rates were going up that would bring some affordability to the market. Unfortunately, it actually did the opposite. So you now have almost record home prices with also very high interest rates. So affordability is very, very difficult. And unfortunately, based on the number of homes that are being constructed, there is just not enough product out there in the market, and there really is no way to reverse that in the next 5 to 10 years. Let's talk about like condos that you have listed. Are they selling?
Right now, probably the most popular product anywhere in the Golden Horseshoe would be single-family homes, townhomes, maybe semis. Condos are probably the one segment of the market that is not faring as well, especially out in Toronto. A lot of inventory on the market, a lot of investors that purchased pre-construction condos over the last 5 years that are now being completed, and they did pay higher prices for those. And so, we're finding there is a little bit of discrepancy there in what they paid versus what they're worth today, and with higher interest rates, those investments aren't as lucrative. So condo market, it's humming along, but not the same way that the rest of the market would be.
Okay, let's take a look. We got about 30 seconds left. What do you see as the hot spot right now in your market?
In the Hamilton area, most of the market is pretty hot overall, believe it or not. But although when you start moving down in price point, any of the more affordable areas is where you're going to see the most activity, especially with high interest rates. So Hamilton proper, Hamilton Mountain, Hamilton Center, downtown center of the city, Hamilton East. Those are where the areas you're going to see the most activity.
Okay, Michael from Michael St. Jean Realty, thanks very much. We'll get your links up on our website, chch.com/morninglive.